Alrighty, and we are live. Welcome to another Lunch and Learn with Purse Strings. My name is Maggie Nielsen, and I'm a partner here at Purse Strings. We do these lives to help get some great information out to our communities of women so you can really feel knowledgeable when it comes to your finances. But then when you need to go put some actions in place, getting ready for retirement, you want to invest some money, maybe you're going to become a stay-at-home mom and need to set up a spousal IRA or something like that. We have top tier financial professionals willing, ready, and able to serve you. We call those our Purse Strings approved professionals, and Erin is one of them. So we're so excited to have her on today to really share her expertise for stay-at-home moms and different 401k options after leaving the workforce. But before we dive into all that fun, Erin, could you give us a little intro of who you are and what you do?
Hi, yeah, sure. So I'm Erin. I'm a partner and financial advisor at Ford Financial Group. It's a small firm associated with LPL Financial, and it's a firm my mom started in the early 90s. So our clientele, I'd say, are mainly women. We work with a lot of divorcees and widows and just couples in general, but we've always thought education was the most important part of what we do, and making sure that we collaborate with our clients and help them reach their goals.
Love it. Yeah, I was telling Erin, before we jumped on here, her and her mom kind of have a YouTube series as well going on right now, which is super awesome. And you should check it out as, her mom kind of explains her story of how she started the business and then how Erin got into it as well, which was really moving. So if you haven't checked that out, you should definitely do it. What's the name of your channel?
I think it's Redmond Financial or Erin. No. I'm sorry. It's Erin and Nick Financial Advisors, and that's
All
on
right.
YouTube. Yeah.
All right. And we can link it down there as well.
Okay.
Yeah, no worries. But yeah, today we're talking about making sure you're still funding retirement if you're becoming a stay-at-home mom or just leaving the workforce in general. And so, Erin, I just kind of want to start with, why is monitoring and keeping current with the family finances so important, even though you're not working?
Yeah, well, it's really important that partners or your spouse, you see it as something you do together. So, everyone, you should know exactly what's coming into your money flow and going out, what bills need to be paid, check in with your feelings about how you feel about money, as well as just be on top of everything. Just, whether you're using a budgeting software like mint.com, or whatnot, or, for instance, for me, I stayed at home for 3 years when my kids were little. And my husband, the way he managed the day-to-day finances was just this crazy spreadsheet that I only made sense to him. And so it was frustrating for me. And instead of just accepting it, I just duplicated it and did my own. And I used mint.com and I categorized everything. And at the end of the month, I'd look for patterns and themes of where I was spending the most, and kind of dwindled it down from there. But yeah, I think that being aware of what is going on, not turning your eye to it, I think will help with peace of mind and empowering you and creating more, that independence, that we need when we're the ones not working or whomever is staying at home, if you will, or in between jobs.
Yeah. And so I like how you didn't just take what, you kind of gave up on your husband's process, but you did find something that worked for you, which is so important to do, as we don't always all take information in the same way or learn the same way, but you could still get to that same end result. And I think I would have to stick with you on the app is much easier than doing a DIY spreadsheet.
Yeah, that takes a lot of brain power to put it together as well.
Definitely. But yeah, leaving the workforce, you do leave behind, a lot of benefits. And one of those is like a 401k match or something for retirement, or even earning that income to set towards retirement. So how can you save for retirement if you're not working?
Well, there's a few ways. If you are married and you file your taxes together jointly, you could open a spousal IRA or a spousal Roth IRA. The limit, if you're under 50, is $6,500. That changes year to year sometimes. where your spouse can put 6,500 into his IRA and then match that 6,500 into your IRA under your name. That's one way to do it. If you're over 50, you can do 7,000 a year. Another way, so if you have a savings account that's in your name and you want it to grow a little bit, say if you're in between jobs, another idea could be putting it into a money market fund, considering, especially now, because interest rates are paying they're paying good interest because they're high right now. Whether checking with your bank to see what their rates are, or you can work with a financial advisor on that too. Those are liquid, but you are putting your money in there to grow it a little bit at a faster rate than if it was in a savings account at your bank. Another way you could do as well is just a traditional taxable investment account. According to your risk tolerance, and if you have extra money, you want to invest in that. You don't get the benefits of having it in a retirement plan, but it's another way to take some money and have it grow for the long term. I would also say check your documents, make sure, maybe consider the insurance that you have. We often recommend a term. It's cheap and affordable, and it provides good coverage. Or check on the insurance policy that if you have one already, make sure that is enough to cover, if something were to happen.
You're talking a life insurance policy?
Yeah, sorry. Yes. Or disability too. Just all your documents, making sure you have your eyes on everything and understand, where everything is and that you have a plan.
Right. And I know a lot of people who might have like life insurance or disability coverage through work. And so since they left that job, they don't have it, which you kind of forget about sometimes. And then you might want to, go to your professional and fill in those gaps that you have there.
Right. Yeah. Definitely.
And so if they wanted to do like a spousal IRA or the money market, they can just talk to their financial professionals and they help set that up, right?
Yeah, definitely. So, if you have an old 401k plan, for instance, there are several options with what you can do with it. You can roll it over into an IRA with have an advisor with that. You have more investing options if you do that. And you can also consolidate. If you have, say, 2 or 3 old 401ks, you can consolidate them into one, which is nice if you don't want to remember passwords for all these different websites that you have all your money. And I think another way to do that is, and I just lost my train of thought. So apologies, but
no worries.
Yeah. Oh, sorry. The rollovers. Yes. Okay. So another way you could also just leave it with your old employer. That's another option. If that's something that you're comfortable with, you can do that. Or if you're moving into a new job, another option is to see if you can roll your old 401k into your new 401k plan. So there's several options too with old plans out there.
Okay. Yeah. It's always just remembering that you actually know where they are and you know how to access them, as I know once they kind of scatter around enough, they're easy to lose. So it's definitely something you want to keep your eye on, as it is your money.
True. Yeah. And for a personal experience, I think it was 3 years ago, I realized I had a small old retirement account out there. So it even happens to, financial advisors that just lose track of.
How'd you remember it?
Plans. I got an email and it was like, what is this? And I clicked on it and I was like, oh, I have an account here, because they were telling me to take it out. It was very small. It was I think it was like $2,000, but
that's up.
For me, it was like, yeah, all right. And then I rolled it in, but yeah. So, I mean, it can happen. You can lose track of some of this stuff.
Yeah, definitely. And so how can stay-at-home moms then ensure that they have the financial independence and security, even though that they're staying at home?
I'd say in that situation, again, keep tabs on everything, pay your bills with your partner or spouse, be on the same page. Don't let anything not go by your eyes, if you will. So track your spending. You might consider not investing or buying some books, some simple books on personal finance. Start learning in little chunks. Use purse strings. There's another website. It's The Balance. If you Google The Balance, it's it's written by CFPs as well, and same with purse strings. There's tons of information out there that is
Yeah.
simplified and can be easy to understand. And I find if you take things little by little
Right.
over time, that'll add up and you'll be really impressed with how much you've learned yourself.
Yeah, definitely. Yeah, it's
Mhm.
important to be part of those conversations. No, and we always say, know what you're signing to, any of those
Mhm.
insurance documents or anything like that, because they're easy just to throw a signature on, but
Yeah.
sometimes that can bite you later. And so you really want to be aware of what you're signing,
Yeah.
just for your own personal protection.
Yes, absolutely. I would agree with that. Yeah.
And then I know earlier you were talking about kind of going through some money beliefs and how understanding your money beliefs is really essential, especially when like navigating your family's finances. And so how can you kind of dive in and understand, what beliefs you have about money and which ones you might want to keep or you might want to,
Mhm.
get rid of?
Yeah. So this is, and I studied financial psychology through Creighton, which is fascinating. So our money, we all have money beliefs. They're unconscious. They are generational. They're picked up generationally. They're often half truths, they're partial truths,
Yeah.
and we form these beliefs in childhood. So, and they dictate how we see money, how we feel about money, how we use our money, and how we save. Um, and it's fascinating once you learn your behaviors and patterns. There is a way, through journal exercises and some thinking about some of these things. You start to realize that. Well, you just realize what are your hiccups, I guess, in
Mm-hmm.
terms of money, or where you feel anxiety, or what stresses you out, and you can by doing understanding your beliefs and learning more, diving more into them, you can start to get, I feel a lot more empowered about, why you are the way
Yeah.
you are around money.
And so, like, what are some, do you mind sharing like a money belief that you remember really like overcoming and you kind of thought was,
Hmm.
you just remember kind of coming out the other side, like, oh, interesting.
Yeah, yeah. I mean, that would be my 20s, like, like all my 20s. Um, I was terrible with money. I would spend on credit cards, not pay attention, and felt like felt had to dress a certain way, so would spend money on that, which you know um, probably shouldn't have. I would say yes to dinners out. I just wasn't paying attention
Hmm.
until I got a bill and I could not pay it. So over time, I've had to, deal with that. But what I realized is that when I was young, I would see my parents use credit cards or
Hmm.
points, like to travel
Yeah.
for points. My dad traveled all the time for work. And, um, it's funny because my mom is a CFP and an advisor, but just from seeing the way that they would use cards, or we would go on trips, but I didn't realize it was because my dad traveled all the time for work. We had airline miles, and so all
Right.
our trips were free, but I didn't realize it. So I thought that's just what you do with money. And it's just like, it makes no sense now, as an
Right.
adult, but like I was living that way, when I was younger. And I still, it will come up even today.
Yeah, you never really saw them pay the bill or how that money worked
Hmm.
in the background. So it was just kind of
Right.
swiping the card and it always works.
Yeah. Yeah. And it's just little things like that. It can be emotionally triggering things, or it can be small things like what you've observed when you were young.
Yeah.
It's,
And I
yeah.
could see a lot of people carrying the belief of, if I'm not the income earner in my house or if I, left my job for some reason, then that money is not my money and I need to
Hmm.
like protect myself all the way, which of
Right.
course it depends on conversations that you have with your partner of kind of
Hmm.
the agreements that you may have set up, but chances
Hmm.
are it's more of the house money and you're taking care of the
Right.
kids or there's a plan in place of why we're doing what we're doing, but it's hard to kind of come over that of like this is our money even though I didn't earn it.
Yeah, yeah, and I struggled with that too. I felt like I was spending my husband's money, and so
Yeah.
that was tough. Yeah, that was tough mentally because I was so used to working and then taking some time off. It really kind of can mess with you.
Yeah,
Yeah.
definitely. And so if you are working with a client who's thinking about becoming a stay-at-home mom or leaving the workforce, what kind of like, do you usually have this whole conversation with them before they leave their position to make sure everything is in line, or what's kind of your process there?
Yeah. Well, if that's something someone wants to do, we'll make sure that they have their legal documents in place. If you have a child, you want to make sure that you have a trust or a will set up with POA or for financial and healthcare in case something were to happen. Again, check the insurance, double check your rollover options. Locate where all your accounts are, and and just start gradually starting to learn about money. And I think we prepare them by making sure everything is set in place. And so they have peace of mind. And so they don't we can hopefully take that anxiety and stress off their plate so they can focus on whether they're caretaking for a parent, their children, or they're going back to school, what have you. Just making sure everything's in place so it's not in the back of your head, nagging at you while you're pursuing, whatever it is that you like to do.
Yeah, that peace of mind is really essential. It's priceless, really. And so that way you can really focus on what you're doing. And then you could be your expert in your area of, finance and helping them there.
Yeah. Oh, yeah, absolutely. And then, and if they come in for meetings or have worries, they can always call us, and then we'll talk them through that and really listen and see if there's ways we can help alleviate some of that.
Awesome. Well, I feel like we've covered a lot of information. Is there anything that we didn't touch on that you want to make sure is shared today?
And I wrote it down because it's a website. So if you want to test your own money scripts, it is a father and son. It's the Klontz, Brad and Ted Klontz. They are the pioneers in this financial psychology field. If you go to his website, it's www.bradklontz, again, KLONTZ.com/money scripts test. And you can go on there and it's free, and you can start to get an insight into some of your money beliefs as well. There's another exercise that can be helpful if you like journaling. It's called the worst case scenario, or the stress inoculation. You pretty much write out what your biggest money fears are. Then you pretend like the worst of the worst has happened, that all of that has come true. All your money fears have come true. Like, how would you feel? What would you be thinking? What would you do? How it would, questions like, how would it affect other people? Once you do that, then you can write more about what would you do? Like, what actions would you take? Like, how would you overcome this? How would you improve this situation? And then another part of it is finding 10 things to be grateful for, even though you're in that situation. When I did this exercise, I realized that I'm more resilient than I thought I was, more resourceful than I thought I was. And it just brought a sense of ease over me. So I really like that exercise. That's just some tools that, you can use to start to understand more about yourself and how you see money and investing.
I've definitely done that exercise before, and I definitely want to do it again, as it does make you realize how resistant you are. And even if, all hell breaks loose, you're going to be okay, which is like, wow, even though and it's not even you found that through numbers or through confirmation, but you kind of find that in yourself, which is exciting to see.
Yeah, I think that's the best part of it, is that you realize that, you can overcome some of your biggest fears, and maybe they're not as scary after all, after the exercise.
Definitely. Awesome. Well, thank you for sharing those exercises. And we'll also put the link to the money script test in the show notes as well. But thank you, Erin, for coming on today and sharing your expertise. If anyone has more questions, please reach out to Purse Strings or reach out to Erin at Ford Financial Group. Her email is eredmond@fordfg.com. She's also one of our Purse Strings approved professionals, so you could check her out on our site, pursestrings.co. So thank you again, Erin. I hope everyone else has a great rest of their day.
Yeah, thank you so much. This was fun.
Bye.
Bye.